Hey, it's Rick. On Saturday, we managed to get through Friday the 13th without too much harm. As far as our risk model goes, everything is still looking good, heading in the right direction. But I am getting a little cautious, as I'll get to here in a second. I may end up rambling a little bit in today's session, but bear with me. Pull this out of the way. So starting with again, I got the daily here and the weekly on the left-hand side. So looking at the S&P 500, we've had a really good move since early first week of January. But we are coming into a little bit of headwinds here. We have, of course, the 200 sitting just above us here, and then we have all this congestion here. So it's not going to be, I don't think it's just going to blast right through here and go straight up. We're going to get some resistance chop in this area here. This is my guess. One of the interesting things, I'll just quickly go to the Qs. Still weaker, but going in the same direction. It's still a long ways from the 200. And again, if I draw a box around here, we got a lot of unhappy investors up in that area there that are going to be happy to get their money back. So that's going to pose some resistance. The ones that's doing stronger, the mid caps are doing pretty well. You can see it's come right through the 200-day moving average, right to the top of this area here. So these small and mid cap companies are performing pretty well, as is the really big guys, the Dow Jones. It's kind of interesting, but again, they haven't not quite as strong, and they're coming into this area here, which could stall things down a little bit. But what I wanted to point out here is up here, as I always have on my charts, this is the closing price of the S&P 500 on the daily chart. And I've just drawn some relatively, this goes back to August, some relatively short-term trend lines. So we seem to peak here, but it's rising here. What's interesting here is the volatility is decreasing. And this is a really good thing, because when you look at the range, when you're up in this area here, I'll just pick this spot here, top to bottom, you're around 15 or 16%. Whereas now, if you're a buyer of the S&P 500, and then but your stop is underneath this trend line, it's only about 5%. So this is what we're looking for, is lower periods of volatility. Just to contrast that, just going to the weekly chart. Let's go back to the SPY. Pull this one out a bit. So it's been a pretty wide range, and actually getting a little wider. The interesting thing here is, so we have this high. This makes the first low back in January 24th of 2022. We come back up, and then reverse, sort of washes around in here a little bit, and then has this big dramatic day down, which sets a new low, and then comes back up here for a high, but it's not as high as the first one. So we have a move down, move back up, and then a move down again, which sets another new low. And what I find interesting here is that in August, oh no, this was May of last year, it came back up, but could only get back to the 10-week moving average, and then set a new low. And then rip past that, but still set a higher low, and then another lower low. And then we reclaimed here, or rebounded here. Again, though, it's another lower high. So we're still in a defined downtrend. but this pullback here got contained about halfway through. If this were really scary times, you would have expected this to come down to here, but we didn't. We stopped here and then rebounded. So we're at a pivotal area. This past week was the first, was one close above the 200, or this is a 40-week moving average. And generally I say get invested if you have two closes above the 40-week moving average. But I certainly wouldn't go a whole hog, because there is still some risk, in my view, that something bad could happen, unforeseen, and we do just head back down. And this is a pivotal area. This area right here, 374-ish on the SPY, is a pivotal area. If we get below that, then we're in trouble. But that's about 5% lower from where we are today. So if it's time to be back in the market, I wouldn't say on Monday or Tuesday. My suspicion is when I go back to the daily, we're going to, or look at this one here, I think we're going to roll over a little bit, come down here, and then this would be a perfect scenario, is to come down here and then do this. That would be beautiful, to retest it. But if it does that, then I'm going to be back to fully invested, and I would recommend other people do the same. Currently, I'm, like probably some of you, I'm 24% invested in my long-term accounts. I'm not willing to increase that exposure until we get a definite trend above this trend line, and a definite move above the 200-day moving average, and this 200-day moving average starts moving up. So that's that. Let me just take off. I can leave that on there. The other useful thing about having this on the screen is, or my charts, is it allows me quickly to see the relative strength of how my stocks are doing, or potential stocks are doing, compared to the S&P. If you're going to buy stocks that are just basically going to follow exactly this, I would say, like, why do you buy the stock? You may as well buy the index, because then you don't have single stock risk. So we're always looking for stocks that are going to perform better than the benchmark or the S&P. So I won't go through all my positions, but just as an example, you look at CPRX is going up, same as this, but it actually did follow a little bit here. This moved down. This held up a lot better. A new position, Neti. It's been going constantly up, even in this period here when this was going down. So I think you get the idea. HWM, yeah, it's been steadily going up, even in this period when the market was going down. So these interest me. Couple on my watch list. Which one was I looking at? BSX. I mean, it's got a nice base here. It's moved up, and it's got a nice base, but the whole time this has been basing, the market's been going up, but this stock is not. So that's less appealing to me. However, in the next 2 weeks, if the market indeed does this, comes down, and this one just still stays sideways like this, now the picture changes completely. Now it now has relative strength, and I would be much more interested in buying a breakout under those circumstances. So that's just how I use these. Going back to the volatility issue and how it's decreasing. We take a weekly chart of MDY, the mid caps that are performing really well. This is exactly what you don't want to see in a chart, where the trend line, the highs and the lows, this is like a megaphone effect, which just means that volatility is increasing. So this is much more dangerous an environment than something like this. So just very basic chart watching ideas. What else did I want to? Okay. Oh, for those of you who don't like to sell stocks when you're in a losing position, here's what can happen. Recall from last week, I had a position, very small position in Logitech. And I think I mentioned I really normally stay away from stocks that are in the declining 200-day moving average. But this one appealed to me for some reason. It had a good chart pattern. So I entered it somewhere around here, I think it was. Sold some on the way up. I remember selling some on this day because it got extended. I sold a bit more on this day because it got extended. I wasn't worried about this one as far as holding over earnings because their earnings were posted to be released on January 26th. So I got a fair bit of time. I rarely, unless I got a huge cushion, hold a stock over earnings. It's just too risky. Well, what day was this? This was Thursday. On Wednesday night, they issued a preliminary earnings estimate that showed their revenues were down 20%, earnings are down, something like that. And so the next morning, I had a tiny position left in this, but still, next morning, I was faced with this huge big gap down. So I had a market order in to sell, so I sold it right at the I think I got 56.38. Basically where it closed to. It opened at 56.38, so I exited my position and took the loss. And some might say, well, shit, it's way down like that. You got to hope for it to come back. Well, look what it did the next day. It's down another, I don't know, 5%. This will be a long time before it ever gets back up to my original break-even point, or let alone make a profit. So, you just take your loss and move on. In the end, I think because I'd sold a couple of pieces along the way, my loss on this trade ended up being only $121, or less than 1%. Anyway, that's a lesson for you that you guys don't want to sell when things go down. It's a mistake in my view. It's you're either going to have really dead money for a long period of time, or it's going to get a lot worse. So that's really about all I have to say for this weekend. I've got it's highly unusual for me. I have 9 open positions and all 9 are profitable right now. So I'm a happy camper. My trading account's up 11% in the first 2 weeks of January. So, fingers crossed. Because of my feeling, and it's only just that feeling, that we could roll over here a little bit and have a 3 or 4 or 5% decline in the S&P. I'm tightening up all the stops on my current positions. If they keep on running, great. If they don't, I'm gonna book some good profits and look for some new opportunities when things settle down. So that's it for the weekend. Have a great week, everybody, and another video maybe out next week, a couple of times. Cheers.